What if I told you that the investment strategies that worked for the last decade are now totally, completely broken? Well, that's the big idea in a fascinating new report from Tran University, and in this explainer, we're going to dive into their blueprint for how to actually win in 2026.
Everything in the report really boils down to this one single question. For the past 10, maybe 12 years, investing kind of felt like it was on easy mode, right? But as we're about to see, the rules of the game have totally changed, and 2026 has a whole new playbook.
And this is where it gets interesting. The team at Tran University didn't just point out the problems. They went deep and uncovered some really surprising opportunities for anyone who's willing to, think a little differently.
All right, so let's get into it. First up, the new rules of money. Before we can talk about specific investments, we've got to understand the massive shifts happening on a global scale.
This quote from the report really just hits you, right? It's so direct. Remember when you could pretty much just park your cash in a broad market index fund, not think about it, and watch it grow? Well, that was the era of easy money. And according to this analysis, it is officially over.
Okay, so the report says this new economy is built on three main pillars. First off, a stock market that's now being driven by real AI efficiencies, not just hype. Second, crypto has grown up. It's not the Wild West anymore. The big institutions are here. And third, and this is the big one that changes everything, high interest rates are here to stay for a while.
Think about it. For more than 10 years, cheap money was basically the jet fuel for the entire investment world. It made asset prices go crazy and, let's be honest, it made a lot of people look like investing geniuses. Well, that party's over, and the old playbook, you can pretty much toss it out the window.
And if you want proof, just look at these numbers. This is the new reality. We are talking double-digit interest rates for business loans. I mean, can you imagine trying to start or grow a small business when you're paying this much just to borrow money? It completely changes the math.
And all of this leads to a super important idea called the hurdle rate. It's exactly what it sounds like, a hurdle. With money this expensive to borrow, any new project you start has to clear a much, much higher bar just to be profitable. A lot of those old, safe deals just can't make that jump anymore. Okay, so that's the big picture, which is, a little scary. But how does this actually affect things on the ground? Well, the report gets super specific and zooms in on the real estate market in Louisville, Kentucky, which is the perfect example of how these big global forces create a really tough local problem. So here's a quick snapshot of the Louisville market. Prices are holding pretty steady, but the two numbers to really focus on are the price for existing homes, $164 a square foot, and the fact that inventory is way up. This sets the stage for a major puzzle.
So let's say you're an investor in Louisville. You've got capital, you're ready to make a move in real estate. What do? Do you build a brand new property, or do you just buy a house that's already there?
In this is where it gets crazy. It costs $220 a square foot to build new in Louisville right now. But you can go out and buy an existing home for just $164. I mean, you don't have to be a math whiz to see that this is completely broken. This is what the report calls a negative arbitrage, which is just a fancy way of saying you're losing money from day one. You are underwater before you've even put a shovel in the ground. Trying to build a typical market rate property right now is just a losing proposition. So if the front door is locked, is there another way in? Absolutely. And this is where the report gets really exciting. It's all about finding those hidden opportunities, finding the arbitrage that everyone else is missing. So what is arbitrage, really? It's just about finding the glitches in the market, the little cracks in the system where things don't quite add up, and then using those inefficiencies to your advantage. It's about being smarter, not just following the herd. And the report zeroes in on two specific, high-conviction ideas that completely sidestep the problems we just talked about. We're not talking about luxury condos or volatile stocks. We're talking about building affordable housing and growing a real local business.
Okay, check this out. The first strategy is what they call the affordable housing hack, and it's honestly brilliant. Instead of going to a bank and getting hammered with those high interest rates, you tap into government grants and forgivable loans. This means the project is actually profitable from the get-go. And the best part? You get a guaranteed fee as the developer, so you're protected from market swings.
Now, the second opportunity is just as clever. The report frames it as using workforce grants as free equity. Think about that, free equity. So, for a proven local business like the Louisville Beauty Academy, instead of taking on crushing debt to expand, you use state grants designed to train people for jobs. It is literally like getting a cash injection for your business without giving up a single piece of ownership. It's pure rocket fuel for growth.
All right, so we've got these two fantastic, unconventional ideas. But how do you actually put them together into a coherent strategy? Well, that brings us to the final section of the blueprint, the barbell approach. The barbell approach is such a great visual. Just picture a weightlifting barbell, right? On one end, you load up the really heavy weights. That's your high growth, maybe a little more risk kind of stuff. On the other hand, you've got your safe, stable, predictable assets. And the key is you completely avoid everything in the middle. All that mediocre, boring stuff that doesn't really get you anywhere.
And here's what that barbell looks like in practice, according to the report. You see the two extremes. A big 40% chunk goes to that high-growth engine, the Beauty Academy expansion. Then 30% goes to the super stable, low-risk, affordable housing play. The rest is just a cash cushion for safety and a little diversification. This is a portfolio literally custom-built for 2026.
And look, this isn't just some abstract theory. The report lays out a practical, step-by-step roadmap. It starts with getting your financial house in order to get the banks on your side, then you aggressively go after those grants, and finally, you start acquiring the actual assets to make both sides of the barbell a reality.
Which really leaves us with one big final question, doesn't it? In this crazy, complex global market we're all living in, maybe the biggest, safest, and most profitable opportunities aren't hiding in some complicated Wall Street product. Maybe they're just solving real problems for real people, right in our own communities. What if the very best investment you can make is right in your own backyard?